Oh, we're live. Sorry. I'm trying to make sure that I'm staying behind this table enough so you don't see my love handle over here. So, welcome. It's the Bill and Wendy show again. Because Jonathan is on the road, but he will be back next week. Listen, our theme is the state of the union, basically, the state of the real estate market right now. We're going to get a little bit more into multifamily, some funds as in FUND funds. We might touch on some more short-term rental, but this is mostly going to be about buy and hold, multifamily,
the big stuff,
single family portfolio kind of stuff, and what's happening in the market right now. But we'll bring you some more detail right after this. Yeah, Wendy is reminding me that my tease should be a tease and not a speech.
I'd love to be the guy who comes up with all those graphics. That's kind of cool.
Yeah, it's a nice job to have if you can get it.
Yeah.
So thanks for joining us on the Passive Accredited Investor Show. We are Carolina Capital Management. We are lenders in the Southeast for real estate investors. If you're interested in borrowing money and you're a real estate investor, go to the carolinahardmoney.com, click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and most importantly, sign up for Wednesdays with Wendy. As many of you know, Wendy devotes 30 minutes of her time to each individual, and she does it via Zoom or FaceTime or telephones if you don't want to be seen.
I think yesterday I had someone on that was a complete and total counseling session. That turned out really good. It was fun. We do everything. We talk about everything. It's really good.
If you really want to get value out of the session,
come prepared.
Make it about real estate.
Come prepared.
She'll be happy to talk to you about anything you want, but make it about real estate. Well, we are, oh yeah, by the way, questions, comments, thank you. We do have the chat section to the right-hand side of the screen or underneath. If you have any questions or comments, we'll be happy to answer them in real time.
That's right.
If not, then we may or may not have somebody that will read after the fact.
We're working on that. We working on that through our EOS meeting. We had our quarterly meeting just day before yesterday, and we're going to get better.
Yes. Who's supposed to answer those questions?
Oh, I didn't even know they came in.
Maybe people that might know the answer. That would be helpful.
That's right.
So one of the things that we are very fortunate in having is a great group of mentors, friends in the business.
Brain trust people.
One of our favorite friends is Randy Lawrence. You guys have seen him before. He's been a guest on our show. Previously, I like to call him Reverend Lawrence because he can certainly preach the word as
Amen,
well.
Brother.
Right?
That's right.
Randy, thank you so much for coming on.
Awesome. Well, I appreciate the introduction, and great to be back here again together with you guys. You guys have an awesome not only business, but show and give back to the community. So
thank you.
Love being a part of it for sure.
Thank you.
Well, we appreciate you coming on. Randy, and I'll let you touch on this to remind people of where you are in the business, where you started. But you started off doing some single family fix and flip, and then you've grown into a
real bona fide,
pretty large portfolio multifamily operator, right?
Yeah, for sure. So we started off 18 years ago, 03, with actually small apartment complex was our first buy. And then we did a few small complexes, 7, 10, that kind of thing, 15 unit, excuse me. But then really got focused in Florida, white hot market in 04, the house flipping thing was like, just going through the roof, and So there was more money in that in an immediate kind of bang for the buck. And so we started just really focusing on that and scaling in that. Of course, with the '08 crash, that really set back a lot of people, including us, but continued on in that journey really through that time. And, probably about 15, 16 started really focusing back on large scale multifamily. So we flipped probably about 1,000 houses over the last 18 years. And then now as a multifamily owner operator, we have about $250 million in assets that we own and manage. And that's right about 2,300 plus, give or take, rental units comprised of that portfolio.
Wow. That's incredible. You mentioned something that really kind of falls into what we were talking about earlier. And that's, a correction. We talk about what's going to happen. Things tend to be cooling off a little bit. And you brought up that, 08 set you back just like it did everybody else. How is it that it set you back? And what I'm trying to do is to let people know that you don't need to have fear with the change in the market. So like, what's the worst thing that happened and how'd you come through it?
Yeah. So I think, one of the things it was definitely a painful time that I had to work through a lot of things, but one of the greatest teachers or lessons that came through that kind of baptism of fire was to be much more strategic, because one of the things that I saw as we went through that time period is that the truth is our buy and hold properties, our apartment communities and our single family rentals, they lacked really a quality strategy in terms of in Florida, you just get what you get and don't throw a fit at that time, right? Because it's like, the market's so hot. And so where we would buy an apartment complex in a D area because it was a deal, right? And, what happened in that area, and again, I mean D area by there's hookers walking down US 19 and, it's it's definitely a gentrifying area, right? It was like rough. But it was a deal, right? And so again, we fixed it up, made it better. But when that collapse happened, good Lord, rents went from 550 to 275 there, in a matter of months. There was other factors that happened, like all these neighborhoods went vacant on foreclosure, and so people could move up into better, housing stock. But the thing that I learned is that, we didn't really have enough quality mitigation in our strategy when we're buying those things before. And so that forced us to have to work through that, which we were able to successfully do. And, none of our investors and our private investors over 18 years never lost capital, always made a double-digit return. I mean, I got my face punched in for sure, and it was very difficult to have to work through that year over year over year to get where, we could, and thankfully with cash flow, you can work through things and then be able to exit in better times. And so, but I think what you said is a very paramount thing. You don't need to fear the uncertainty of the future or the possibility or inevitability of a market downturn or slowdown. You just need to be prepared for it and have that to be thoughtful in your execution. I think a lot of times people just probably run and gun, and they may not be thinking and or developing things with a strategy in place that factors in those risks.
Right. Especially the people who weren't around in 2008.
Oh, yeah. Everything just goes up.
Yeah. Yeah. I remember the sting. In every deal that I do, I remember the sting.
Yeah.
You gotta have that in the back of your mind. And I love what you said. You need to be more strategic in what you're doing.
Yeah. I mean, as an example of that, hope not too long, but we looked at a community in one of our main areas in Atlanta, great potential deal, but it's in a little cul-de-sac community. And there's, one property there, and then the subject property there. And the two other properties were run by crappy landlords, not real good, had disquality people living there. This property had potential, but it also suffered during the previous downturn. And then now when you look at that, you've got two other crappy landlords right here that are going to have not good people in it. And then now you go into a downturn, you've got sub-quality people living right there. it's going to drag you down
Mhm.
from your performance. So even though it looked good on paper, we knew all those little nuances and details. We said we'll pass on that deal.
Yeah.
And that's a thing that, people sometimes don't know because they don't have the strategic element. They haven't been through the pain,
Right.
or then they don't know actually the market itself to be able to have those nuances. They just think, oh, it's a great deal and let's do it. Whether it's a
Right.
house or, multifamily property too.
Right. Well said. Well said.
Yeah, when we look at a deal from a lending perspective too, we went through that too. We were initially going after the high dollar properties,
Very high dollar. Yeah.
and because let's face it, you're getting the same money on less work
Yeah.
when it comes to lending, but your exit strategies are fewer and farther between. If it doesn't work out, plan A, then plan B and C is not a good alternative. And that's why we've focused in on the income producing properties and the affordable housing on the single family stuff, because we know that worst case scenario, if we end up owning all these properties, we can still get what our expected return would be on a loan in rents until the markets come back up. And we always know that they will come back up. If we own them, it's because everyone's a seller and no one's a buyer.
Yeah.
And if that's the case, then certainly we can still make an income on them until then.
Right.
Well, and that's a really important thing. A lot of people don't look at that. They have multiple exit strategies. You know what I mean? Where you're looking at that very thing where hey, I can make the loan, it's all good. But if I needed to, I can operate it and rent it, and it's still all good. And that's something like even in our single family business, probably in 2015, we shifted gears to focus exclusively on, this market at the time was like sub 250 houses. Now it's probably ticked up to, 350 kind of thing as retail value. But that's all single family kind of first time home buyer, affordable homes for this market where I'm at in Florida. And, so kind of going back to that point you said, Wendy, about fear, good Lord, we've been buying those houses for 6 years, right? Now we did it in 15. I just sold a couple $1 million homes back then. And I'm like, look, I don't want to go through all that crap. It's, it's a much easier to focus on just these cookie cutter 3-2-2-1-2-2, little simple houses, and we fix them up and sell them. If you needed to, you could rent them. And so we were able to buy hundreds and hundreds of houses during a time where a lot of people were thinking, just like we were, hey, there's going to be a downturn at some point, and we want to be prepared for that. Right. And I don't think any of us, of course, knew it was COVID, but and the other piece of that is we were stockpiling cash for liquidity during that same period of time, so that when actually the downturn hit and COVID hit, we had great financial liquidity. We were able to tell all of our employees, hey, man, you don't got to worry about your security, your job, but you better be kicking ass right now, right?
Yeah.
Because this is the time that because in our L10 meetings, we would talk about these preparations and condition our team to be thinking that way and improving systems, improving strategy. And then when the kind of the doo-doo hit the fan and it's like, oh my God, the world's falling off the cliff. It's like, that was one of the first meetings. I was in California. I came back, we had our team meeting. I said, you guys don't have to worry. People are being laid off left and right. But what I'm telling you now, because I knew we stopped buying apartments and we got to see where the world lands, not ends, praise the Lord. Lands. But it's like, look, whatever, call it 30% of our focus is on acquisitions. We're not doing that now. Right. So that focus is on better execution. And so you better step up. And, we really held people's feet to the fire, but it was, a great learning experience too. For many of our team members, because those people hadn't been through what we'd been through.
Right.
A lot of them.
Right.
Well, at the same time, this gave you an opportunity to be more communicative. I don't know. You were able to communicate more with your current tenants.
Oh yeah.
You had those rent moratoriums or eviction moratoriums in place. And you guys came out of it really well because you were upfront and communicating.
Yeah,
for
how'd that
sure.
work out for you?
Yeah, literally, we were in Tahoe for a month in March is what our family plan was. And then that thing all falling apart. It's So I think we jumped ship like around the 21st or something. My wife's like, if we don't leave, we'll never get out of here, you know. So we flew, came home. But that's exactly what I did. As soon as I got back, our first meeting, we huddled all of our regional managers, all of our property managers, all of our property management company partners on a huddle call and really kind of broke down. We went into this like kind of coaching mode. And exactly what you just said, Bill, we had all of our properties had like at the ready texts with the unemployment office for that state, the local list of charities that would provide, you know, food help, and whether it's the Baptist Union or the, you know, whatever, Red Cross or, you know, whoever was providing help, we had that listed. And then we actually did weekly coaching calls with our, you know, on sites to provide that kind of input to the tenants. And so we really did have a better result where, you know, even though maybe somebody got laid off from their job, as many did, there was at least communication and a willingness to work together. And that helped where, you know, we just didn't have giant onslaughts of rent strike kind of thing. You know, it's like, you know, and also most of our people, it goes to operations. We've done a good job to screen the people. Now, sometimes we just bought a property, so you inherited some bad seed. But most of our people, we've screened them, and they're just decent working people that want to provide a roof for their family. And, you know, yeah, they got laid off from the, you know, manufacturing plant, and we tried to work with them, help them file for unemployment benefits or help them connect with the charity for food assistance. And, you know, so that engendered a lot of respect. And I think if you treat people like a human being, that helps in that, you know, dialogue, and it helps with the result, you know. So definitely not an easy time, though. I mean, you know, just, I don't think it's easy for anybody. We had to go through a lot of kind of ups and downs and government garbage and just all that stuff.
Yeah, we did as well. But I tell you, we came out a much more efficient business on the other end of it. Fortunately, again, we have mentors, friends. We were prepared. We had a blueprint for just in case. And I didn't think it would be put into action that soon, but
for sure.
Literally had a blueprint put in place, literally less than 45 days prior to this happening. So when it happened, we knew exactly what we needed to do, and it worked out really great. So having said all that, and, you know, with real estate just booming like it has been, how is it that you're able to still find so many good apartment deals? They're not just good buys, they're deals.
Yeah, for sure. Well, and again, I think, you know, we've done the work a lot of times people are not willing to do. And what I mean by that is developing the relationships with the key parties that are the real people that are transacting the business. And so, you know, what I mean by that is, you know, our size apartment communities, call it $5 to $50 million. 90% of those, I'd even probably say 95% of those are going to trade majority through brokerage firms, just because they're not mom and pop sellers. And so we've developed those relationships with the guys that are the, you know, top three firms in any market we operate in. And they know us to be a proven executor, right? So that's one thing. And then two, another piece of it is we've done the work or the groundwork a lot of times, even with those relationships. Like, you know, we're entering into the Tampa market here. We've looked at this market and we're making our first purchase right now. But in the process of doing that, we kind of eat some crap sandwiches, right? Like, you've got to, you know, do some difficult things, underwrite a bunch of turds that you know are turds beforehand. But you've got to be able to do that to be able to explain why back in the relationship, hey, you know, this numbers don't work and this doesn't work and this doesn't work, so that the people understand that. And then, you know, thankfully for us, the transaction volume we've done, and then also the size of the company we are, you know, we are a highly recommended visible operator. And so that opens it up. So when we have those off-market opportunities, like this deal we're doing in Tampa, it was an off-market property. And so we were able to kind of bring it together. It was actually two sellers, and bring it together and execute on it to create a great deal. And so, you know, the truth is, and I tell this to other people, it's like, there's certain people in certain markets, like, they're never even going to see that property. What they're going to see on, you know, LoopNet is just a piece of crap that nobody wanted. Like, and because in that space, it's being transacted in that manner. And so, we put in the difficult work to get those relationships.
Mhm.
Another example would be where you got some guy that's kind of like a dirt bag. He kind of retrades the broker on his commission, which that's dude, live up to your word, for God's sakes.
Sure.
That's like,
Right.
let your yes be yes and your no be no, kind of a little ancient throwdown from the scripture.
That's
and
right.
But so we've come in and said, dude, look, hey, that's wrong. You did a ton of work on this thing. Put that 25 grand on my side. Now, most people wouldn't do that. They're like, are you freaking kidding me? That's $25,000. Dude, on a $12 million purchase, that's 25 grand.
Right.
And yes, that's 25 grand out of my pocket, but it also was the right thing to do.
Right.
I didn't have to do it, but it demonstrates the level of character and integrity we operate by. And that's where that guy knows, hey, man, I got this great deal that John's wanting to sell. Who am I going to bring it to? The guy that's a scumbag or the guy that's integrous like Randy that
That's
closes
right.
and lives up to his promise?
That's
So,
exactly right.
I think people look for the secret bullet to success, and it's like it's
Doing the right thing.
it's doing the right thing over a long period of time. You know what I mean?
Yeah.
Day in, day out, doing it, even when it feels like crap and you don't want to do it.
Right.
You do it anyway.
That's exactly right. That's one of our core values.
Yeah,
is
it's
doing
hard
the right
to be.
thing even when only God's watching.
It's hard to be relational when your mindset is transactional.
Mhm.
Yeah.
And that really, it shows up, and you're constantly having to look for new people. If you're a transactional person, if you're relational, you're just concentrating on those relationships, and the business will come.
Right.
For sure.
I want to get in. We're getting kind of close on time. I wanted to get into the longer term exit strategies that you have, and I don't mean necessarily exit, but long term strategies. You do a lot of value add, or mostly value add.
Yep.
Let's look at the conventional financing once you've got these things stabilized and ready to go in your final financing. Are you seeing any changes in financing right now? I know rates are really low and they have been for a while.
Super
Are you
low.
seeing any pullback on the LTVs or anything like that?
On the large scale multifamily side, at this point in time, it's still, kind of really a big hunger and a big appetite for the loans. And so, we're still seeing very strong, 80% loan to value, or even on acquisition loan to cost. Again, now there are debt service coverage constraints, in terms of that. But, 3.5 to 4.25 rates, depending on what the situation is of the property.
That's free money.
For sure. I mean, like, good Lord, if you can get we're doing a deal. I think it's tracking at 365 right now. God Lord, that's, a nudge above historic inflation, right? That's free money, realistically. And, so for us, we are definitely about executing the value add plan. And, like yesterday when I was at the due diligence at the property, and like value add to me is like, how can I create a better quality of life for the people that live there?
Mm-hmm.
And because by doing that, it's going to create greater value for us. And so like we're at it's a multi-site location about 1 mile apart, and one location, it's an entire city block, things like 14 buildings, 33 units, real nice.
Wow.
But there was majority 1 bedrooms, and like out of the, whatever it was, I think 30 of them didn't have washer dryer. So,
Wow.
but I identified an area there where we could build on for about $24,000 ish, a washer dryer facility there. Right. So that's the kind of thing that creates real value, not just also renovating the units and making them nicer, but then creating better amenities and better livability there. And, by doing that, we've increased the value. Now we've got more to work with if we wanted to refinance and keep the property for a longer term on the cash flow, which can be an option that we execute, or if we're then selling it, it's like you've got a built-in increase of value because of the real work you've done. And, again, I go back to the doing the right thing over a long period of time. It's like that execution of a plan for us usually takes, 12 to 18 to 24 months, depending on, renovating units on the turn. We do a lot of that, the laundry room, outside stuff all in the first, 3 to 6 months. But, you know, that's the biggest part is like, are you really adding value and improving the community? Because then now you've got multiple exit. Even if rates move up or even cap rates, you know, go up, I doubt that happens in the near term, but that you've got such an increase of value that you can easily still refinance out, pay out your existing debt, pay out your existing equity capital, and still operate on a cash flow basis. So, and again, goes back to Bill, what you said about multiple exits, right? Like we look at that, like we could sell the property or we can refinance. Strategy part, if rates go up, but we've increased the value by this much, we can still refinance. And, you know, so we're very much so able to sleep very good at night because we've got the bases covered.
That's awesome.
That's yeah. Again, I just touch on adding value and relationships really count. That's the way to do business. I don't understand why more people don't do business that way. And getting back to the financing piece, you know, they're FHH. I can't even say it. They're cutting back on the Fannie
Mae and Freddie Mac. Yeah.
You know, portfolio sizes for second homes and investment properties. I know they're doing that because the government doesn't want to hold these smaller things, and a lot of the hedge funds are getting in there and buying up most of the rental properties now anyway. But what it's done is it's added an opportunity for those big funds. If they can't buy the property, they'll just finance it for somebody else.
Yeah.
Mm-hmm. Yeah. Well, I think too, what you're starting to see this kind of the woke thing going on, of course, in every aspect of everywhere. And they're going to start mandating even more things like they did before, but probably even more so about, providing equality in housing through, how they're going to structure affordability to back loans. And, so no doubt they're, paring down in one spot to then push in this other spot. Pre-crash, there was some things where, again, they loosened the credit requirements for people to get, it's like we want home ownership for everybody.
Sure.
The truth of the matter is not everybody's ready for a home, right? Like it's like you've got to have financial stability to be able to take care of, not only just your mortgage payments, but like, hey, you got to fix stuff. And, and so I think that's part of also what's going on some of the single family pullback side with the agencies, and more of the larger scale stuff, so capital driven that, and again, you've got so much money coming into the multifamily and rental and single family rental space. I mean, there is hedge fund after hedge fund coming into the tune. I mean, I just saw, I think it was Tricon just did $5 billion agreement where, I mean, they're expanding their ability to buy up to $5 billion with a new equity partnership they just made. I mean, rental housing, and this goes back to our investment thesis. Over the next decade, and I would even say that it's 2 decades, that rental housing is going to be one of the best investments that you could make, both multifamily and single family, because you've got an ever-growing demographic of renters and job people, $30,000 to $70,000 a year jobs in this country. Those people are by definition majority renters, call it 80%, based on their income and expenses. Those people absolutely have to have a place to live and rent. And, there's roughly anywhere from $5 to $6 million shortage, or units rather, shortage of quality affordable housing, that it'd take them a decade just to build to try to catch up on that based on population growth.
You're exactly right. We got a question from Rick Bressler. He's asking, Randy, what cap are you seeing out there?
And that does, great question. It varies from market to market, so Atlanta could be 4 to 5, depending on the asset class. Dallas, 3.5 to 4.5.
Wow.
Areas here in Florida, 3.5 to 5.
Wow.
Now again, for us personally, I get that.
That's not good enough for you, of course. But.
Yeah, I couldn't, buying a property that's, okay, we're projecting a 3 cap over the next 3 years. Like that doesn't work. Now, that being said, again, also you got to know what you're doing too. Cause so we may buy a property that is a low cap rate going in just because the value's not been released because it's ma and pa kettle that have, they haven't drawn the rents. They're getting 800 rents in markets really 1,050. It's
Right.
like, so we're still paying a number that's under market value for the property, but relative to its current income, it's not at a great return. But in the
Right.
next 12 months, based off our execution, it will be,
Right. Right.
So, and, every market's different too, and then also each asset class, A, B, C. We don't really do D properties, just like,
Right.
again, going back to the story in the beginning.
The hookers on.
No, yeah, exactly. Yeah. So like if I, and if I go to a property and it's uncomfortable, it's not our thing. You know what I
Right.
mean? It's like, I need to be comfortable and again, I've been in some rough areas over my years, but it's like, you want to have a place that I posted a video on Facebook about one of our manager team members, like a place that people could be proud to be their home, right? That they pull in and they're like, this is nice. I like living here.
Right.
Be proud to have family members over and make dinner, and so that's, we look for good areas because then you're going to get better people.
Right.
Well, I mean, if you look at the classes of the properties too, I wanted to touch back on that. And typically, a Class A type property is going to have a much lower cap rate. There's less work. I always like to figure in the return on investment or on effort into this.
Yeah.
So your Class A are going to be, much nicer properties, fairly new. The people that are moving in there have money. They're higher on the income scale.
Yep.
If you get down into the C properties, you're going to have higher cap rates, but there's going to be more effort involved.
Yeah, for sure.
And so it all boils down. If it's owned by a REIT, it's probably going to have a pretty low cap rate.
Yeah.
Well, that's the thing. Like in this market here in the Tampa MSA where we're located, there's a lot of, REITs and funds of that nature that exactly that. They're willing to take a lower return based on the area, based on, the thought process of appreciation and based on their ability to take that low return. So even too, where they'd buy a B property at a, 3.754 cap and maybe they yield out at 6%. And so that's like a decent little real estate bond for them. You know what I mean?
Right.
And banks are willing to do that low of a cap rate.
Yeah. It's, I think it goes back to the reality is the truth is there's no yield in the global world. Right. And so that's where you have more and more money coming into the U.S., more of that's funding into alternative asset play and then making its way into real estate because, in most quality real estate ventures, you're getting a higher yield return than what is maybe available. Like, so right now, junk bonds are 6%, 5.75%. That's for crap.
Yeah.
Right. And it used to be like 8%.
Yeah.
And now it's been suppressed down. So there's people in their portfolios, they don't even know it. It's like a high yield fund. No, it's all trash. It's, but it's like, whatever company fund administrators on there. And, you can do so much better risk adjusted in real estate. Even like, let's say that hedge fund that's getting that 6.5 yield on that low cap property. It's still backed by this tangible $50 million asset, cash flow pumping in every,
right.
Like that's way better than some crappy ass junk bond at 6.75.
That's right. That goes
And that's
away.
why they're doing it. You know what I mean? Plus there's tax advantages too.
Yeah.
Well, people are looking at the stock market and wondering when is this going to end? It just can't keep going up. But let's face it, that the equity markets and in the exchanges are going to continue to do this as long as interest rates stay so low.
Yeah.
No one is going to spend 10 years on a bond that's going to give them 1.3%.
Exactly.
return.
Yeah. It's not
So
there.
the only other alternative is real estate. And at least with real estate, you have a tangible, like you said, a tangible asset
It's a tire you can
that
kick.
is backing up the investment. Where in a company, it's just a promise of a cash flow.
Yeah, we promise we'll do good.
Well, and I look at like investing even with a company too, like yours, you look at the returns the investor gets, and then that fund is backed by real estate. It's like, and then whether it's, with loans on fix and flips or rental or whatever, it's backed by real assets producing real results. And it's a much lower risk-adjusted return. I mean, it's a much better risk-adjusted return. It's a
Absolutely.
lower volatility than what you experience. I mean, that's why I left the traditional money management business. I was a stockbroker and a registered investment advisor for 15 years, sold my company in 06, started the private equity real estate in 03 because it's just a better mousetrap. And I would venture to tell you that that's the truth. And over this next decade, we're going to see that with the real estate backed assets. There no doubt's going to be an economic correction in the stock market, as there always is.
Sure.
And for many people, you know, they feel all good about it now until your $1 million becomes 650, and then they're like, "Oh crap!" and like start breaking out in hives and like, you know,
jumping off of rooftops.
for sure. You know, it's better to take the $1 million now and begin to diversify that portfolio and get it where you're not subjected to that. And we see that a lot with people that invest with us, because it's like, good Lord, they're 60. And like last year when their portfolio dropped 30% in March, they're like, oh my God, I've got to do something different. Because like they know maybe retirement's only 5 years away, and like now you're not working, you don't have any more money going in that thing. You know,
That's right. That's right.
So, Randy, if people want to find out more about investing in what it is that you're doing, how can they get a hold of it?
Yeah, I just write to our website, pcpre.net. That's pcpre.net. Yeah, there on the screen. And there's a button there you can just click on to, you know, find out more. Plus, we've got, you know, testimonials of investors that have invested with us and projects that we own in terms of apartment communities and all like that. So love to answer anybody's questions and, you know, provide value and help. You know, that's what we're here for. Really, our mission, you know, is twofold. It's really impacting the residents that live in our communities and creating legacy and wealth for our investors.
Awesome.
And full disclosure, while our fund is not invested in some of Randy's projects, the management company is. So
yeah.
Well, and that's, you know, and that's a testament not only to, you know, to us, but you guys too. And we've got multiple guys just like you that invest with us because everything we're saying is true. It's like, it's going to be the investment of the decade. That's why, I mean, like if you read the Wall Street Journal for a month, right? It's like you see entity after entity after entity moving into this space because it is just, it's going to be the investment of the decade. There's no doubt.
That's right. That's right.
Absolutely. Randy, thank you so much for joining us. I'm
sorry
we kept you longer, but
no, it's always a pleasure. Always a pleasure. Love seeing you guys. Love what you do and love being a part of it.
Thank you.
Thank you so much.
Thank you.
Folks, thank you so much for joining us on the Passive Accredited Investor Show. I always want to say passive aggressive. We are Carolina Capital Management. We're lenders for real estate investors in the Southeast. If you're interested in borrowing money, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, and subscribe. Hit the bell, all that good stuff, and sign up for Wednesday with Wendy. Get some of that free info from her.
That's right.
See you guys next week. Enjoyed it.
Thanks so much.